What is life insurance? Life insurance is a contract between a life insurance company and a policy owner. A life insurance policy guarantees that insurer pays a sum of money to one or more named beneficiaries when the insured person dies in exchange for premiums paid by the policyholder during their lifetime. As life insurance is a legally binding contract that pays a death benefit to the policy owner when the insured person dies. For a life insurance policy to remain in force, the policyholder must pay a single premium upfront or pay regular premiums over time. When the insured person dies, the policy's named beneficiaries will receive the policy's face value or death benefit. Term life insurance policies expire after a certain number of years. Permanent life insurance policies remain active until the insured dies, stops paying premiums, or surrenders the policy. A life insurance policy is only as good as the financial strength of the company that issues it. State guarantee funds may pay claims if the issuer can't. Types of life insurance. Many different types of life insurance are available to meet all sorts of needs and preferences. Depending on the short or long-term needs of the person to be insured, the major choice of whether to select temporary or permanent life insurance is important to consider. Term life insurance. Term life insurance is designed to last a certain number of years then end. You choose the term when you take out the policy. Common terms are 10, 20, or 30 years. The best term life insurance policies balance affordability with long-term financial strength. Decreasing term life insurance is renewable term life insurance with coverage decreasing over the life of the policy at a predetermined rate. Convertible term life insurance allows policyholders to convert a term policy to permanent insurance. Renewable term life insurance provides a quote for the year the policy is purchased. Premiums increase annually and are usually the least expensive term insurance in the beginning. Many term life insurance policies allow you to renew the contract on an annual basis once the term is up. This is one way to extend your life insurance coverage. But since the renewal rate is based on your current age, premiums can rise precipitously each year. A better solution for permanent coverage is to convert your term life insurance policy into a permanent policy. This is not an option on all term life policies. Look for a convertible term policy if this is important to you. Permanent life insurance. Permanent life insurance stays in force for the insured's entire life, unless the policyholder stops paying the premiums or surrenders the policy. It's more expensive than term. Whole life insurance is a type of permanent life insurance. It accumulates a cash value in order to last the lifetime of the insured person. Cash value life insurance also allows the policyholder to use the cash value for many purposes, such as a source of loans or cash or to pay policy premiums. Universal life (UL) insurance is a type of permanent life insurance with a cash value component that earns interest. Universal life features flexible premiums. Unlike term and whole life, the premiums can be adjusted over time and designed with a level death benefit or an increasing death benefit. Indexed universal life (IUL) is a type of universal life insurance that lets the policyholder earn a fixed or equity-indexed rate of return on the cash value component. Variable universal life (VUL) insurance allows the policyholder to invest the policy's cash value in an available separate account. It also has flexible premiums and can be designed with a level death benefit or an increasing death benefit. Term versus permanent life insurance. Term life insurance differs from permanent life insurance in several ways, but tends to best meet the needs of most people looking for affordable life insurance coverage. Term life insurance only lasts for a set period of time and pays a death benefit should the policyholder die before the term has expired. Permanent life insurance stays in effect as long as the policyholder pays the premium. Another critical difference involves premiums. Term life is generally much less expensive than permanent life because it does not involve building a cash value. Before you apply for life insurance, you should analyze your financial situation and determine how much money would be required to maintain your beneficiary's standard of living or meet the need for which you're purchasing a policy. Also, consider how long you'll need coverage for. For example, If you are the primary caretaker and have children 2 and 4 years old, you would want enough insurance to cover your custodial responsibilities until your children are grown up and able to support themselves. You might research the cost of hiring a nanny and a housekeeper or using commercial child care and cleaning services. What affects your life insurance premiums and costs? Many factors can affect the cost of life insurance premiums. Certain things may be beyond your control, but other criteria can be managed to potentially bring down the cost before and even after applying. Your health and age are the most important factors that determine cost, so buying life insurance as soon as you need it is often the best course of action. After being approved for an insurance policy, if your health has improved and you've made positive lifestyle changes, you can request to be considered for a change in risk class. Even if it is found that you're in poorer health than at the initial underwriting, your premiums will not go up. If you're found to be in better health, then your premiums may decrease. You may also be able to buy additional coverage at a lower rate than you initially did. Life Insurance Buying Guide. Step 1. Determine how much you need. Think about what expenses would need to be covered in the event of your death. Things like mortgage, college tuition, and other debts, not to mention funeral expenses. Plus, income replacement is a major factor if your spouse or loved ones need cash flow and are not able to provide it on their own. There are helpful tools online to calculate the lump sum that can satisfy any potential expenses that would need to be covered. Step 2. Prepare your application. Life insurance applications generally require personal and family medical history and beneficiary information. You may need to take a medical exam and will need to disclose any pre-existing medical conditions, history of moving violations, DUIs, and any dangerous hobbies, such as auto racing or skydiving. The following are crucial elements of most life insurance applications. Age. This is the most important factor because life expectancy is the biggest determinant of risk for the insurance company. Gender. Because women statistically live longer, they generally pay lower rates than males of the same age. Smoking. A person who smokes is at risk for many health issues that could shorten life and increase risk-based premiums. Health. Medical exams for most policies include screening for health conditions like heart disease, diabetes, and cancer and related medical metrics that can indicate risk. Lifestyle. Dangerous lifestyles can make premiums much more expensive. Family medical history. If you have evidence of major disease in your immediate family, your risk of developing certain conditions is much higher. Driving record. A history of moving violations or drunk driving can dramatically increase the cost of insurance premiums. Step 3. Compare policy quotes. When you've assembled all of your necessary information, you can gather multiple